Hi everyone, I'm Ken from Crypto Trading KS. Let's run the numbers. Bitcoin currently trading at 47,963, up 0.4%. Ethereum 3411, up 3.72%. My goal is to assist you to be more of a financial blessing to yourself and those you love, and also gain real wealth in the process. In this episode, we're going to talk about crypto and real wealth, focusing on strategy. I have hidden knowledge gems throughout this video. Unless you watch to the end, you'll miss them. See how many you can find. Rule 774, master yourself to master the market. This is a very, very powerful rule, and not just about trading and investing. When you master yourself, when you have no enemy within, no enemy without can defeat you. That's a very famous and old saying. Rule 62, know your strategy. With trading and investing, the components of real wealth are just as valuable as money, sometimes more so. Having inner and outer peace, gratitude, happiness, integrity and decency, kindness, determination, fearlessness, empathy and love, they're beautiful things. They should be part of your strategy, part of your plan. To grow real wealth, you need to plant it. And you notice I put plan in here. Central to any strategy is a plan. Looking at KS zone analysis, the 4 stages that all investors and traders progress through to become consistently profitable and attain real wealth. Having a strategy to move past internal panic and external panic, that is zone 1 and zone 2, into zone 3, which is probabilistic fearlessness. That's the patience and rule zone. And having a strategy to move into zone 4, the meaning zone, which is all about inner and outer peace, authenticity, fulfillment, especially with a focus on integrity, honor, and self-worth. It's also important to have a strategy as to what you're doing with your money. Are you a trader? Are you an investor? Are you a speculator or gambler? Or do you have all 3 qualities and just divide the money across the different buckets? That is perfectly fine to do. You don't have to be just one thing. You're an unlimited human being. You can do whatever you want. It's also quite important to know the differences between the internal panic zone and the external panic zone, zone 2, and zones 3 and zone 4. I'll give you a really easy way of looking at those. Zone 1 and zone 2 are basically all out or all in. Zone 3 and zone 4 is moderation in all things. It's about scaling in and scaling out. It's a very good way to go. When it comes to investing and trading, you will hear some people say that you should go all in. I really recommend that you don't do that. The crypto markets are inherently volatile. Going all in is almost invariably a mistake. Our community is really balanced. We look at the pluses and we look at the minuses. We say, what is our strategy if things go up? What is our strategy if things go down? Those kind of questions are really important. We have a volatility fund called the 10-5-10 Volatility Fund. Now, what is that about? It's really about harnessing the inherent volatility in the crypto market. It's about buying the dip. And it's not about greed. It's about readiness. It's about the fact that the crypto markets are so incredibly volatile. They can swing 10, 20, 30% in a couple of days. If you know the overall trend, where we're going, and you deploy your 10-5-10 fund, it can be a fantastic and life-changing source of wealth. That's why it's not really a good idea to go all in or all out, because crypto is very, very volatile. I had some very nice comments in my Twitter direct messages today. Oh, they were always nice comments. Some people said, Ken, I'm changing all my light switches at home to dimmers so I remember to scale in and scale out. I thought that was so cool. Well done. Crypto Trading KS is all about community. There are some really good community questions, and please reach out in the comments and let me know what you would like me to cover. There were quite a few comments on, am I a trader, investor, gambler? I don't know. I'm not sure what I am. That's a really, really fair question. Maybe perhaps the best way to go is just to allocate some percentage to things. If you're risk averse, and that's fair when you're just starting, you may like to be a certain percentage as an investor, maybe a dominant. I won't give you a number. I want you to figure that out, because that's what this is all about. Then you might say, well, a smaller percentage could be as, for example, a trader, so I can book profits on the way up. And maybe a certain percentage is a gambler, where I just reach out and I do those 100-to-1 shots, and I know I could lose all my money. But on the other hand, it may have some good upside. Venture capitalists are all about gambling, literally, with companies' futures. Actually, there's a very good statement in the venture capital or VC industry. They only expect 10% of the funding that they do to be successful, and they make sure that it covers the 90% that didn't go well. Another really great question is how to move from the on-off switch to that graduated entry and exit, to the dimmer, the graduated in and the graduated out. It really starts with a philosophy, and it starts with an understanding as well. In Zone 1 and Zone 2, there's a lot of terror, there's a lot of panic, either directed internally or directed externally. That's all coming from a foundation where someone wants certainty, and that's totally understandable. We all want certainty in our life. We don't want grey areas unless we're being entertained by a film or something, but we certainly don't want uncertainty with our money and returns. The key is moving into probabilities. When you have probabilistic fearlessness, you're looking at the charts with a probability mindset. You're saying, what is the probability of it going up? What's the probability of it going down? At the start, you may not know, but the more that you focus on it, the more you will understand. The more you backtest something, that is, look at past price behavior of your beloved alt or alts and see what kind of volatility is in there, the better that you will actually maintain this probabilistic fearlessness. And it's all about accountability. When you're in Zone 1, or when people are in Zone 1 and Zone 2, and it's really important to understand, these are the 4 stages that all investors and traders go through. There's not one trader, not one investor that hasn't gone through 1 and 2, Zones 1 and 2, so don't feel bad if you're there. Another key is patience. People tend to go all in or all out because they're impatient, because they're not quite certain what is going to happen. That is just a natural evolution of you gaining expertise from Zone 1 to Zone 2 to Zone 3. Think nothing of it. As you develop more patience, you can move from that light switch to the timer. That means that you can move from all in or all out to gradually in and gradually out. And you could have different timers, different dimmers. You could have a speculation one. You could have an investment one. You can have a trading one. There's all sorts of things you can do. You can do anything. You're an artist and you own your life. Thank you, Dimitri, for this article on the Coinbase hack. The question is Coinbase unsafe? Should I get out of there? And it wasn't just Dimitri that asked this question. Many people did. It's always good to actually analyze what's going on. The first thing to understand, this is not just something that happened. It happened in March and May of 2021. It didn't happen just now. It happened a while ago. It affected 6,000 customers. as Coinbase is the world's second largest crypto exchange with approximately 68 million users from over 100 companies, guess what they did? They said, we will cover the losses. Sorry, I meant to say from 100 countries, not 100 companies. Ken. This was really all about, there was a flaw in their multi-factor authentication, and this was probably an inside job or a phishing campaign that was probably related to banking Trojans, where you would receive an SMS, you would click on some link, and that link would basically steal your credentials. If you ever get any emails or any SMSs with a link, I would suggest you don't ever click them. So in answer to that question, it happened a while ago. Coinbase is making sure that any money that was lost is reimbursed. That's the good thing with going with the giant companies. I had a question as well. When is Altseason? This is a really interesting question. Longtime community members know my answer to this already. I say it's always Altseason. Now, why do I say that? Everybody says, oh, Altseason occurs when this and this and this happens. The truth is that every alt moves probabilistically, directionally with Bitcoin. If Bitcoin is tanking, if it's going down the drain, you can be assured that the alts are going down the drain with it. If it goes the other way, you can be assured they're coming up. Now, it's not always 100%. It's probably 99.5%. We actually have a rule, Rule 45. No alt can escape Bitcoin's gravity. Bitcoin literally has a gravity. That's why we track it so closely. Ethereum and Bitcoin share very similar gravities. Although the percentage change up or down can differ, they traditionally move pretty much in the same direction. For example, we tend to look at this particular diagram, which are the top 33 Binance cryptos, and how they're moving over a 14-day period. When you see Bitcoin coming up, that gravity pushes all the alts up. Some, like Axie Infinity, Luna, just completely outgun the percentage move in Bitcoin, but you get the other direction as well. When Bitcoin comes down, it pushes all the alts down with it. This is an incredibly important thing to understand. For this reason, I say that it's always Altseason, because if we understand what Bitcoin and Ethereum are doing, we basically understand what the market will do. I really like the question about pattern recognition on gold, the DXY, and bonds. I've done something really special to answer that particular question in this episode. I'll do it a little bit later on. I hope you like it. It's very interesting. The other question, well, there are so many questions. I actually make a note of all the questions. I will certainly answer them as soon as I can in the videos. What does a fake out mean? That's a really good question. A fake means false. So a fake out is a false move. So if it's going out, is it a fake out or a breakout? Is it a fake uptick or is it just real? And a fake breakdown can mean the opposite thing. Fake means false. Just think about it like that. That's a really good way to approach it. I hope that helps. Please let me know any questions that you might have in the comments section on YouTube. I'd like to share something with you. JP Morgan CEO says Bitcoin's price could rise 10x, but still won't buy it. That's Jamie Dimon. He's not a great supporter of Bitcoin or cryptos, and that's fine. Everybody's entitled to do their own thing. But the key here, rise 10 times. If you're after a 10x, this could be a way to go. Let's have a quick look at investment substitutability. The S&P 500, the proxy for stocks, is up 30% over the past year. Poor old gold down 8% for the past 12 months. Bitcoin up 354% for the past year. Look at the 10-year, 1,000,000%. Bitcoin, how could you? If you're new to crypto, you might see these returns and say, wow, Bitcoin only goes up. And there are a lot of people in the crypto space touting that narrative. They want to suck you in. Believe me, it's not like that. We always look at the middle path. The volatility in Bitcoin is to the upside and the downside. Many people are not told the downside even exists, and they get a complete shock when it happens. Fidelity Investments did this analysis on Bitcoin drawdowns. Now, to understand this, Bitcoin is the most stable of the cryptos, and it has big drawdowns compared to the stock market, and they happen just about every other day or every other week or every other month. When you get a 20% decrease in a crypto, in Bitcoin, we call that every other week, but they call it a stock market bear market. It's really different. When people come from the stock markets into crypto, they expect the same volatility but with crazy returns. It's not like that, and it's important you get the right thinking behind you. If you got the right thinking, you are forewarned and therefore armed. From a positive side, when the price is going up, when resistance is cleared, we can have 80% gains, 40% gains, 40, 70, 20, 47, 250% gains. That's what happened in the last bull run. But we also get, and this is what a lot of people don't talk about, we also get 20% decreases, 40%, 15%. They're just all over the place, 30%, sometimes 50%, sometimes 80%. You've got to be really careful. That's why we always take the middle ground in our community. Turning to the KS model, which is a crypto technical trading model based on institutional price psychology, you may see many people put up the chart of Bitcoin. There are a lot of black swan events that occur. A black swan basically is a rug pull across all markets, including Bitcoin. For example, this sell-off here that occurred on the 12th of March 2020 was related to the US liquidity crisis and COVID. That was a very substantial sell-off. These are the best things in the world to buy. That's why we have the 10-5-10 volatility fund. But it's really important to understand, black swans can occur at any stage. Don't be fearful of them. If you have a 10-5-10 volatility fund, you don't need to be. You can be excited. We always look at the upside and the downside because we want to be prepared for what's happening, and we let the price action determine how we're actually tracking. Before that March 2020 crash that I was just speaking about, if we were here in the current cycle, we're seeing a bit of an uptick to a resistance line. This is from March 2020. Now, I'm not saying this is happening, and that's important that you don't get into any panic. Don't flip a light switch and worry about it. The price movements will show us the way, and we have to be basically positive because the market has a lot of momentum behind it. If this resistance is just a wall the price cannot get through, if it rejects and then it rejects a support, we're pretty much on the way down. This is what we look at. These rejections, when we get a thing called capitulation, which is price falling off a cliff, if you are not prepared for capitulation, this is a really devastating move. But if, for example, in our community, we're looking for these things, we really want to buy them. When you do, something can start at 10, go to 5, so it loses 50%, and go to 5, and then from 5 go back to 10. That's 100% increase. This is something to bear in mind. So what happens typically is very bad price movements, negative price movements, don't take a lot of time to eventuate in the market. Markets tend to come down hard. This 57% decrease from this point here happened in 19 days. Over 56 days, the price increased 143%. This is why we have a 10-5-10 fund. And because of black swans, anybody that would recommend that you would go all in is definitely in zone 2, and you should be wary of them. When people are just starting in crypto, it's really difficult to know what to look at. When we look at Bitcoin and Ethereum, they're the two dominant forces in the crypto markets. The alts get their percentage moves from Bitcoin and Ethereum's movements. Now, when we look at the combined market capitalization of Bitcoin and Ethereum, it basically tells us where the market is going. What we can see here, we've passed across a line of resistance. Price has rallied up, but it's been rejected here. That's not necessarily a bad thing. We have a line which is a really important line. What you'll find is not all resistance lines have the same weight. For example, this resistance line is a weak line. This is a stronger line because I put it in blue to show you that. This one is a really major resistance. When price gets through here, and we have no doubt that it will at some stage, when it does, and it gets above this line of positive momentum, then the probabilities are sided with massive gains in price. Key, what do I mean massive gains in price? I mean it could come up 80 or 90%, go down 20%, come up 40%, and then go down 40%. Note this particular breakout here, just at that level. Many people would say, oh, I've missed out, I've missed out, I've missed out. And then they start to buy here, and then it tanks down to this level, and they say, oh, I missed it, it's all over. The 10-5-10 fund allows us to buy these dips. If we're in positive momentum, we use the 10-5-10 fund to try and take up these long tail rejections. Now, what if this resistance line doesn't hold? What if price comes up to here, gets rejected, tries to get up and is less, and gets rejected and rejected and rejected? What could happen then? We may be looking like something like this kind of price action. This is a potential. At the moment, everything is siding with positive probabilities, but we have to be aware that there are some very nasty systemic risks in the market at the moment. The US has its own problems. It needs to, on December the 3rd, raise the debt ceiling limit. It was really good that they actually signed a bill into law that increased the duration of gaining that agreement on the debt ceiling. However, we also have some issues with Evergrande in China. Now, we'll just keep our eye on this, and we trade the chart in front of us. Price action reveals the reality. So if price action is going up, we say, okay, price action is going up. I'll just show you really quickly. I was suggesting that the NASDAQ and Bitcoin are starting to correlate. As the NASDAQ is coming down, Bitcoin is coming down. But the NASDAQ did a little bit of a rally, but it's still under resistance. Bitcoin did a rally, but it's still under resistance. Now, if we go back into the past, do we see any correlation? Yes, we do. And the thing to understand is that the NASDAQ is not open 24 hours a day. So we're seeing some things here that have a degree of correlation. I just point that out because I want people to be aware of relationships that do exist. There's some people that say, stock market, it's not important. There's no correlation between crypto and the stock market. I'd just like to answer that with the concept. Global stock markets are worth around 95 trillion, bonds about 128 trillion. This is from November 2020, and the bonds from August 2020. So they're of course worth more now. The issue is stocks flow into bonds when there are problems. When there are not problems, when things are sailing really well, bonds flow into stocks. Stocks typically flow into crypto. There's some actual movements at the moment about bonds flowing into crypto. Wow, that is phenomenal. Can you imagine if 10% of the bond market found its way into the crypto market? That's $12.8 trillion as of August 2020. That is more than the market capitalization of gold. I'll come back to the associations a little bit later, but I tried to give you a really holistic and balanced perspective. Another thing I wanted to say is that quite a few people, quite a few members of our community have said, Ken, I can't create this chart. This chart is this particular equation that I've put in here, because people have found that they need to buy literally a US $600 a year subscription to TradingView to get that. So what I'm doing is something to just help out. I'll be posting regular updates in the community section of our channel, and basically just giving you a little bit of an update on what is happening. I hope these constant updates will keep your finger on the pulse of things, and I don't want you to pay $600 a year to get this particular chart. I'm very happy to do this for you. The regulators are going after stablecoins, and one of the largest is Tether, USDT. If you go to bybit.com and you look up just from the homepage, you go to the search, enter in USDT, you will get this. USDT is worth $68 billion. This is from coinmarketcap.com. If there is a problem with Tether, there will be like a bank rush. Everybody will be trying to get their money out. The smart money would have got their money out of USDT long before there's a rush. What we would see is highly elevated open interest levels going into the hundreds and hundreds of millions, billions, and then tens of billions of dollars. We don't see anything like that on the current futures, either the traditional futures or the perpetuals. I do this so that you can learn how to look for yourself. You will find that there will be an increasing number of news articles on this. Before we get into pattern recognition, we like to cover through the liquidations. Over the past 24 hours, there's been 196.65 million in liquidations across 52,884 traders. Over the past 12 hours, around 50.4% of liquidations were short. We can see we've got really low volume. These short liquidations have been pushing up the price. A few community members have asked why there's such low trading volume. It could be due to many reasons. One reason given by one very well respected community member was that he felt that the Chinese crackdown on cryptos may be taking some liquidity out of the market. That means that when these shorts were liquidated, it was only 295 million, which is really not much. When they were liquidated, they adversely pushed the price up. When a short gets liquidated, they have to buy. If there are a lot of shorts getting liquidated, all of them have to buy, which spikes the price. As this video was getting a little long, I've actually divided it into two parts. The next part will cover these things on pattern recognition. We'll be going literally through 32. I think it will help you tremendously. That's coming up in the next episode, and in the next episode I'll just like to personally thank all the people that bought me a coffee on buymeacoffee.com/cryptotradingks. So nice of you. And a video just for the coffee club as a way of showing my appreciation will be out tomorrow. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you to our moderators for keeping our community safe from scammers. Please say hi and let me know where you're viewing from, and if you have any questions. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. I've left helpful links in the description of this video. I'm really very touched and honored that you're still here at this stage. We have a secret word for today. It's strategy. If you would like to weave that into your comments and let me know that you made it this far, I'm so impressed. You're awesome. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, take care, and see you next time. Bye for now.